Good morning, traders. Thank God it is Friday. Let me just kill my squawk for a minute and welcome you all to the Black Friday Flow Show. And CME has its own Black Friday for the moment. As most of you know, they have a cooling system issue, so they can't send any prices. They can't provide any prices in futures, treasuries, equity futures, and some liquidity providers in the FX market are also having issues with it. EBS is having big problems as well to provide prices. So what you see now may be different once they get their act together and get their system started up again. So just a bit of a warning already for people having positions that it could all change abruptly when they come back online and when equity markets, equity futures, treasuries, etc. are reopened. And before moving on to the rest of the show, let me remind you that you can still benefit from this 30% Thanksgiving offer of all trader funding program plans. Posting the link in the chat room there, in our chat room. Oh, by the way, guys, those in Forex Analytics chat room, it seems I am back because my chat room collapsed as well a few minutes ago, so it seems that I'm back. So yes, you can take advantage of this 30% of all plans on the TFP using this Thanks 2025 code. Now let me share another screen and where am I? Where am I? Where do I need to go? Here. No? Here. Oops. Just let me. Okay, do you see the calendar page? Just quickly asking. Do you guys see the calendar page? Hello? Anyone? Okay, let me just verify. Oh yeah, okay, thanks, Brian. Right, let's go over to the musings, what's been said and done overnight. And let's start in Asia. Starting with Japan, the Japanese coalition has added 3 independent lawmakers, and by doing that, they are securing a majority in the lower house of the Diet. And that is very important because having this majority, Takeichi can now press forward with whatever plans that she has. She will have the support of most people in the lower house, guaranteed. Okay, and that was something that we spoke about, and I mentioned already before. Some of those independents could side with the new coalition and give them the majority. So now that seems to be a done thing, which is going to be very interesting and giving Takayama the freedom to press forward with the budget and the extra budgets. And speaking about that budget, the MOF will issue about 11.7 trillion yen in fresh debt issuances. They will leave though the 10 to 40 year bond issuances, JGB issuances unchanged, but they will up the shorter end. They raised the 5 year and the 300 year by the 2 year. 5 year and the 2 year by 300 billion dollars equivalent, I think that is, or is it? No, 300 billion yen. And they also will dramatically raise the 2025 to 2026 fiscal year T-bill issuances by a whopping 6.3 trillion yen. So that is really mimicking what the Fed of the Treasury, U.S. Treasury, is doing right now. This shortening all maturities, so they're bringing the debt closer to pay less in interest, because obviously the longer end interest rates are much higher than the shorter term interest rates. And just to speak about those debt issuances, there's also been an article out. The UK Office of Budget, or the Treasury, is also going to talk to investors and talk to market participants in regards to their own debt issuance after the budget, and they are going to do exactly the same. So it's a new trend for treasuries globally, is to shorten the maturities now. It has an advantage. In the US, it has an advantage because they have a quite big short-end debt market. But for countries like the UK, for instance, it may create a little bit of an issue because the short-end debt market is less deep than, for instance, the US market. In Japan, to come back to Japan. It's a good market, the short end market, but and as we know already, the Japanese whales have also shortened maturities for the time being. So that for as long as they are not interested in diving back into the long end market, the MOF is going to try to fund all those budgets in the shorter end as well. The other thing that may be a bit risky is that obviously it's all been funded shorter term, which means that they won't be funded for as long, which means that they have to start again sooner to refund all of that. So these shorter term markets are going to get increasingly interesting going forward from here. But it's a global phenomenon, as we can see. We also had a few comments out from Katayama. She's saying that the total bond issuances this year is going to be smaller than last, but we know already next year. And that she gave ample consideration to fiscal sustainability. So in Japan, they really want to keep the markets relatively quiet and not start to have those speculators come back into the market and trying to drive the long end JGBs down, for instance. If they would, I mean, it's not going to impact much. So speculators may just steer away from it. And she also added that she has no comment on those yields and on FX. Um, and let's just stay for a minute in Japan, because we know that there were these articles in the press saying that Trump called Takeichi to calm her down. He rephrased it, and he said that the cooperation between China and US should be beneficial for Japan as well. And obviously, he's thinking about his business and all the soybeans that China needs to buy from the US. So he's trying to calm down Takaichi. But we had already a comment from Kihara-san, the chief cabinet, saying that they would probably keep their stance right now. So we may not have seen the end of that story. What else did we have? Yeah, then moving over to geopolitics, unfortunately, we need to talk about them. And yesterday, Putin broke his silence, and he came out with a pretty lengthy speech. And first of all, the speech was looking pretty okay. He said that next week they're expecting Witkoff again. They have seen the plans. They think that there's more work to be done, but he looked to be ready to discuss a few things as well, the European security, and they are ready to begin talks with US at any time. But then as his speech went on, it turned a bit for the worse again. And he was saying that on the risk of the assets seizure in Europe, that would be a negative for the global financial system and would be a theft of property. And then he also says, and there it's going really sour, saying that there is no use for Russia to sign any documents with the Ukraine leadership. He said that the Ukraine leadership is illegitimate and that some people in Ukraine demand to keep on fighting until the last Ukrainian dies. And he added that Russia is ready for that. So he called it legally impossible to sign a deal with Ukraine. So where does that leave us? We don't know. And next week, so they will have discussions. In the meantime, in Europe, there is a bit of discussion going on the seizure of those Russian assets because the Belgian, my compatriot prime minister, he's a bit worried that the rapid seizure of all those assets to use to give loans or to sponsor Ukraine may become to a court case in the international court, and that Europe may be running into trouble. That should have been voted in the next couple of weeks. Maybe that is going to end up being another European story where they can't agree upon anything within the space of a number of months. So that could again drag on over there. What else? Okay, then we are going over to the US. And Trump came out saying that a couple of things. He came out, and there's a bit of hopium for you as well, that he is toying with a plan to completely eliminate income tax over the next couple of years because they will be covered by tariffs income. So that's a bit of a hopium. Besant was already talking that the tariffs income should cover all budget deficits, etc., etc. So that's going to be an interesting one going forward to see if they really get enough of that money. He also reacted to the unfortunate incident of those two National Guards being shot at. So now he's pausing the migration from all, he called them third world countries, and to stop the benefits in the meantime for all non-citizens and all non-US citizens. So that's another step forward in his policy against migration over there. And I think we need to come closer to Europe now. Yes, I think. Oh, one last one in the US is that it seems that the Thanksgiving holiday sales started on a good footing because according to Salesforce data, the spending so far would be 6% expected to be 6% higher than the spending last year. So that's a bit of good news there on the spending side on the US front. And then closer to our home here is that BOE Green spoke yesterday as well. And she said that the latest inflation news has been to the downside and that she's marginally less concerned about inflation since the budget came out. Wage growth remains elevated, but it moves also in the right direction. And then she also added that so far the impact from trade tensions remain fairly small. And I think on the headline front, no, in the UK, the last little line, JP Morgan's boss Jamie Dimon pressed on the green button to okay the building of a new Canary Wharf tower in London. And that is after some UK envoys went to visit JP Morgan last week, apparently, to reassure them about the UK government business-friendly policy. So I think Michael Brown may be not too far away from there. You will have a bit of extra shadow once the JP Morgan Tower will be built, mate. Um, and that's about it for the headlines. So let's see what the data brought yesterday. So yesterday afternoon, yeah, we had a bit of ECB monetary policy accounts. Most of them are on the stand pat side for the things. Some of them do keep the potential open for more moves, but they haven't specified which direction really that was. We had a bit of Canadian data out as well. And then we move over to the night data. Japanese CPI, Tokyo CPI, sorry, came in sticky, so that's another um, possibility to get Bank of Japan over the line because it stays in the high 2%. The unemployment rate was a tick worse than expected, but stays the same. The job to applicants ratio, it moved down just slightly. So that is maybe a sign that maybe things are moving a little bit. Yeah, I wouldn't say in the wrong side because less jobs are obviously not good, but that is something that the Bank of Japan will keep a close eye on. Industrial production came out much better than expected, but we know that industrial production is most of the time very choppy and very jumpy. Could go from positive to negative in one and the other month pretty quickly. The sales, though, the year-on-year sales in the large retailers was pretty good at 5% there. Okay. Then we had some Aussie data, private sector credit, nothing special to mention. The Kiwi money supply a little bit higher. On the New Zealand data, we had the ANZ consumer confidence, which is not on there, if I'm not mistaken, and that came out at a very positive 6.5% versus the prior minus 2.3%. So that was a pretty decent number there. Okay, and then we move over to the Japanese housing starts were also much better than expected, so that's another one that should be positive. Not that we see much difference in yen pairs right now, but anyway, that's another positive there. Sweden, for those who watch the Scandinavian currencies, GDP came out better than expected. Also, the revisions were pretty good, so that should be all right for the Swedes. And the retail sales year on year also came out in pretty positive territory. Germany, the import prices slightly higher, slightly less negative, but that's not really what moved the market this morning. The retail sales came out pretty weak again and weaker on the year on year too. Unemployment rate non-seasonally adjusted in Norway 2.10%. I guess that a lot of countries would just pray to have those kind of numbers still. The other unemployment number came out, I think, yesterday or the day before, and that was pretty much in line as well. So not too much of a move there. Moving over to the French CPI, that came in a little bit weaker than expected, but the year-on-year remains at the same level. It was expected to tick up 0.1%, but it remains at the prior level. GDP in line with expectations over there, and the HICP, that is wrong here, the 0.1%. It was 1% expected, okay? So it came out in line with what we saw last month. On the Swiss GDP, that came out a bit worse than expected, but the prior one was revised by the 0.1% higher, so ball in the middle, and nothing really happened there. And as we can see from Euro Swiss, for instance, it's not moving a lot. Spanish CPI, a tick off on the year on year and on both measures, the headline CPI and the EU harmonized CPI, also a tick lower. German employment, uh, marginal, nothing, actually nothing. So the unemployment rate didn't move either. And then we had the German states coming out, and in line with what was kind of expected is that the monthly numbers coming down slightly, and we see this globally on the month on month. Overall, they're all a little bit in the negative, but then we see data effects, that the year on year remains pretty much the same. But if you look at them, they're all hovering around that 2.2, 2.3, 2.5, 2.2, 2.6. There's nothing that's going to change the ECB's view in these numbers unless we get more negative numbers there on the month on month, which should drag the year-over-year number lower as well, in which case, if it's the same as, for instance, in Germany, where the year-on-year data are now well below the 1% line, then it could start to have the ECB bots to think about what they need to do. But maybe that's music for further. In the meantime, it is true though that the euro dollar has been a bit suffering this morning, but and we will look at the rates for whatever they are worth right now. But maybe those CME things are just increasing any move that might have need to be done something this morning. We will have a look at that a bit later. What's happening for the rest of the day? Nothing out of the US. We will have the pan-German number out, so that should be roughly in line with the expectations for the negative number. That's what I said earlier already, and I think, yeah, if it's coming out at 2.3 instead of the 2.4 expected, I wouldn't be surprised either. And then we will have dated, but we will have the Canadian GDP out for Q3. This Chicago PMI, is that a new one? I'm wondering because I thought we had the Chicago PMI, or we probably had the final for November. So there may be this Chicago PMI hitting the wires a bit later as well. That is possible. Right, that's it. Let's move over to those markets and the prices. And as I already said, it's going to be a strange one today because that CME outage is causing a lot of problems in many markets. But has to be said that the euro dollar is trading lower this morning. Could be that it are month-end flows because we see a little bit of very small but pressure on some European crosses as well. Also, technically, it has rejected again the 116 in the Asian time as well. When we walked in, it was around there. Yeah, Fred, but I think the Chicago PMI yesterday was, or the day before, was the final one for November, if I'm not mistaken. No, actually, yeah, the final one for November, and this may be the preliminary for. No, can't be because we are not in December yet. I think this may be just a mistake. Anyway, yeah, euro dollar, yeah, but it did it. So as I said, it did. Reject the 116 and we are trading back down. Maybe month-end flows, maybe distorted markets as well due to that CME. And I see the edge that you're asking me for gold. Just know that for the past 3-4 hours at least, gold prices have been stopped on most of the platforms. So I don't know if it's of a very big use to look at the metal prices right now. But I'll have a quick look at it anyway. But again, just note that when it seems to be frozen at 4160, 4170, for instance, on gold, but we will not know before the markets reopen, what we really are going to get, for the rest of the day if they ever reopen. What's happened on the cable? We had a bit of, I think that's probably to do with some month-end flows as well. Had a bit of small demand there, but now we are coming back from this 132 and a half level, and we are trading around 132 the figure. So not overly sure what to expect for the rest of the day. We will see what will happen when the systems come back online, because it's not only CME data not providing us with futures on equity markets or on metals or on the treasury futures, for instance, but it also affects FX, because we have seen this morning as well. Now the prices are pretty okay, but we've seen this morning as well with at intervals, having like the main liquidity providers, which is EBS, for instance, in FX, that they had been turned off. So a lot can be distorted. So again, I'm just a warning: be careful if they come back online, because a lot of algos may have been turned off, and when they come back online, they may have stuff to do which, yeah, which could take the market either side. I mean, don't be surprised of any moves this afternoon when they come back online, if they come back online. But anyway, 132 and a half, I think it's a relatively okay level. If we get back there for 4 p.m. or so on the London time this afternoon, it could be another interesting watch. It is also dragging euro sterling down for the time being. This relative demand in sterling still, but the offers in the euro. On the downside, I'd start to look at 131.90. We are not too far away in the cable, but again, disclaimers with all the levels right today, because we don't know what's going to happen. Yeah. But 131.85.90 would be a level, and if it continues to collapse, I think the 131.40, 131.20 is going to be a very interesting level to watch. Okay. As I said, euro sterling, and that is a bit hesitant right now, but we have already spoken about that after the budget, and now we are in month end. Also, we have to take that into account, but I would not rule out a bit of a move down if there's more short covering to be done on in sterling or euro to be sold, for instance. I wouldn't rule out a bit of a move down to maybe low 87s, where I'm going to get very interested in reloading, because I think that, as already been said yesterday, there's no growth measures being brought forward in that budget. So sooner or later, sterling may turn around, and we may find support in euro sterling for it to get back higher. But I'd say let the week go by and see what happens next week in this one. Okay. Looking at commodity currencies, and this one is holding relatively better. We are still hanging around in that 65, 20, 30 zone on the Aussie. Could be that month-end flows. I don't know what's going to happen because of the actually the equities in the US have rallied over the past session. So maybe there could be no flows to be done, or very marginally. But keep an eye on if ever we retest 65 the figure, or 64.90. Okay, over the course of the day, because that's going to be another important little zone to watch. It's around the lows that we have seen here, around 64, 85.90, and this 65 has always been a bit of a passage for the Aussie dollar as well. If we'd hold for the end of the day, if we'd hold around this 65, 20, 30, maybe next week we can start to push higher again. Kiwi is painting a slightly different picture, because we did move up to that 25-30 zone here at 57, but again we are starting to just slowly drip down, okay? Getting back to that 95.05 level zone that I was talking about, the high here, which rejected the first time, and then when we flew through after the RBNZ, it is looking that it is starting to lose a bit of steam again. So be careful if it gets back down below 56.95.05, because there just might be some stops there in the framework as well. Aussie Kiwi, I know quite a few are interested in it for various reasons. It just going back on the daily. As you can see here, this whole rally from April up to what we saw earlier in November, the 23.6 comes in at 114, okay, around 114. We had a quick look, maybe below, but it could be just for the width of the Asian Open. But basically, it's holding right there, okay, at that 114 the figure. So there's going to be two levels to watch here, and then moving back onto the shorter term. People are looking at this 114 and a half level as well, 114, 50, 55 as well. That is the level that has capped the first retracement. So now look, this is your range for the day. And then I would say again, maybe today it's not going to be that important. But next week, maybe we are going to make a decision here, okay? Whether this 114 gives way finally, or if 114 and 50, 55 gives way again. This is just going to have, this is just, will have just been a correction, okay? So this is interesting to start next week. For those who want to steer away from dollars, for instance, have a look at what's happening on the crosses. This is an interesting one to watch, for instance. Um, yeah, dollar yen. Again, it's not really that Tokyo CPI. It's not. It's giving the Bank of Japan and the industrial production and the housing starts. It's giving the Bank of Japan food for a hike. But then after those comments that we saw yesterday, maybe they are still going to wait, and that is, I think, keeping this dollar yen relatively supported still. Also, the fact that Takaichi found support for her budget maybe just holding it back from dropping too far. But watch if it would go back below, I'd say 155.70 here. Maybe this one, it is holding, but it's getting far too close to the market for comfort, this line right now. But watch rather 155.70, 155.85. It starts to get down there, it can start to correct lower. But for as long as that holds, I still have trouble to start selling this right here and now. Okay, but again, huge disclaimer. We will see what happens when the systems come back online. Hopefully later on. Quick word about the Canadian dollar. We are trying, and we are pretty stable. We have those Q3 GDP data out later today, okay? So that could be, together with the month-end flows, that could be a driver. So watch out if we retest 140 the figure, because that is the bottom line of our channel, and it's coming in now right around 140 the figure, okay? On the other side, if we start to get back above 140.80, then it's probably going to move a bit higher again. Not really interested in doing anything myself in between those two lines. And then I'm going to look at it, Derej, but this is, I'm going to go on the shorter term. Yeah, we had this break, okay? Asia started to buy gold again before the CME went down. And then this is where the CME started to go down, and rates were just all over the shop. We don't know where gold is actually. We will see how the market reacts when the CME will produce its data again. I'm having yeah, 65, 70, 68, 70 I'm seeing, but not even sure whether it's really there because in Asian time it was actually trading up at 41.85 and starting to catch up on what silver was doing. So um, even when it comes back online, look at what it's doing in the 41.50, 60 or 41.88.92. Okay, in between those two levels. Once it gets back up, we will see where it wants to go to because right now we don't have a clue, right? And silver, that was really starting to push against the resistance here. I have indicative prices of around 53.90 right now, which is around here. But again, with bags of salt because we really don't know where this thing is really trading right now. Okay, we have it around here, around 53.90, but in Asia, it was starting to push closer up to the big resistance. And yesterday I showed you if it would fly through, we can see a move up to 55, even. Sorry, 56 or even 58, right? It's still my overall view is that maybe towards year end or so we will have reached new highs just because of the price action that we see, and we don't see too much of a of I mean, too long a period of setbacks. Okay, I mean, this is already a longer period than the setbacks that we have seen. So that just tells me that there is still enough demand in this. Okay, right. I am going to leave it there for now because again, we don't know where things are. Really, just pay attention to what's going to happen when the CME will come back online, when the US will open. Hopefully, we will have prices to rely on, and then we will see what the month end will bring. 4 p.m. London, the fixing. We will see what happens there. Thank you very much for being with me today. Ryan is going to be back on Monday when I will have a day off. So I will talk to you again on Tuesday. See you then.